Welcome to Stocks Review. Today we are going to take a look at S&P 500 ETF. Stock ticker symbol SPY or VOO. It is headquartered in the USA and service regions all around the world. The service region may give us a clue of the company's overall stability and long-term growth potential. It has a total market cap of $36.7 trillion. It contains companies in all 11 sectors. The S&P 500 is widely regarded as the best single gauge of large-cap U.S. equities. An estimated $13.5 trillion is indexed or benchmarked to the index. The index included 500 leading companies and covers approximately 80% of available market capitalization. In short, it is a portfolio of 500 large-cap U.S. equities. Despite its recent drop, it has a 5-year price return of 88% and outperforms a lot of stocks. The 5-year price chart may help us evaluate how an ETF has performed recently and its components' ability to weather global events, such as trade war, pandemic, and supply chain issues. It has a 5-year compound annual revenue growth rate of 7.7%. The revenue growth is consistent and the revenue trend looks very strong. The net income is growing. The net income trend looks very good, as it can grow its profit consistently. The net income is one of the most important metrics an investor should be aware of. In the long term, stocks always follow the earnings trend. It has been buying back some shares with shares decreasing gradually. It has a nice dividend and has been steadily growing its dividend throughout the years. The dividend history gives us a peek of a company's cash flow stability. The overall return of S&P 500 ETF is quite good and outperforms a lot of stocks and funds. The total return and annual growth rate history of a company can show us what the performance trend was and how it had navigated through difficult times. Most companies tend to perform similarly with a slight decline in growth as time goes by. S&P 500 ETF has a 29-year total return of 1,595% with a 29-year compound annual growth rate of 10%. If you had $1,000 invested 29 years ago, you would have $15,950 now. Currently, the price is at around $412 for SPY with a 52-week high at $480 and 52-week low at $404. It is near the lower end of its 52-week range. It has a P/E ratio of 24 and forward P/E ratio of 17.7. It has a cash position of $2.7 trillion and long-term liabilities of around $2.5 trillion. The ratio of cash, debt, and market cap may help us evaluate the default or bankruptcy risk and what percent of your share is eroded by debt. Higher debt also has a higher cost in an elevated interest environment. Currently, the average margin is around 12.1%. It has a 5-year forecast revenue compound annual growth rate of 6.5% and 5-year forecast EPS compound annual growth rate of 6.5%. The near-term growth is expected to be good. Now we compare S&P 500 ETF with U.S. Treasuries. It cannot be emphasized more that the U.S. 10-year Treasury yield is one of the most important numbers to keep in mind when investing in stocks. The 10-year Treasury yield affects the valuation multiple of stocks like gravity. The higher it is, the lower the stocks are valued, including all the S&P 500 companies and all the stocks in the world. Currently, the 10-year Treasury yield is around 2.88%. The SPY is considered one of the safest and most liquid ETF for investing in the stock market. Big funds and investors directly compare the risk and return of investing in SPY or in individual stocks. The historical return of all stocks follow the earnings trend long term, however. The real return is often reflected by a mix of dividend and buybacks together with revenue or profit growth affecting the valuation. The return yield of SPY is at around 10%. The SPY has an average forward PE around 17.7 now. We have to be cautious that this is just a rough prediction of S&P 500 ETF's future performance. The forecast can be changed at any time, and the actual revenue, or net income the company is able to get depends heavily on the true market condition. We will try to summarize all the information above to give us an overall impression of S&P 500 ETF. In summary, S&P 500 ETF is a portfolio of large to mega-cap companies with small growth and wide moat, and probably fair to overvalued compared to historical valuation. If you are in your retirement age and want a strong financial fortress that doesn't care about growth, it may still be a good hold long term. Now that's a review for S&P 500 ETF. Click the subscribe button for more up-to-date stocks review. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.